All right then, good morning everyone, as we are just half an hour into European trade on Wednesday the 25th of October. We'll have a look across markets, see what is going on, see what we think might happen as we head towards another day of trading. Now, we were talking a little bit earlier on in the week on Monday about maybe stocks being under a bit of pressure, some positive earnings, strong growth figures, maybe a bit of strong inflation as we come around to Friday, driven by strong growth over Q3. Couple that with some strong earnings, which we have now had a raft of positive earnings releases come across markets. Things like Coca-Cola, Microsoft, Alphabet have all posted positive earnings across the course of yesterday. Certainly Microsoft and Alphabet after the close yesterday did come in positive. Now we have seen stocks turn a little bit lower today. So they said Wall Street closed higher yesterday because of positive earnings. But my kind of other view on it, or my view on it was, positive earnings, positive growth means the Fed still have work to do. Is strong growth and companies performing well doesn't allow inflation to continue to come down. So sparked fears of interest rates higher for longer, which has been a theme in markets recently, and is something we definitely need to think about and keep an eye on. Now, apart from that, we'll get on to what's kind of going on in this morning's markets. Apart from that, we did have the Australian CPI again, Australian CPI over the course of this morning as well, which did spark a bit of upside in the Australian dollar, which we will get around to now in a minute. China's yuan slips as dollar strength offsets Beijing's fiscal stimulus, so $1 trillion yuan um, stimulus package, not direct stimulus package, but you can see stocks rally on $137 billion trillion yuan sovereign bond issue plan. China's stocks rose on Wednesday after the country's top parliamentary body approved an additional 1 trillion yuan sovereign bond issue to support the economy. So again, the Chinese lending support to the economy in order to prop up growth in a flailing economy. So a bit of positivity for kind of Asian stocks overnight, really off the back of that. Where you come around to here, you can see Asian stocks up. You see the Hang Seng, the Asian stock index, and the CSI, which is widespread Chinese stock index. All higher in today's session, but US equity futures, European equity futures are lower across the board. Yields are slightly higher and the dollar is higher, which is this move we expected on Monday. Didn't quite get it yesterday, had a bit of a pullback yesterday, but those moves higher in stocks were not aggressive. We were looking for sales back into them. Those sales seem to be taking place in the overnight session and into this morning. So does that continue the rest of the day? That's what we were hoping for on Monday. Didn't get it on Monday, didn't get it on Tuesday, but you gotta sit patiently and wait for Wednesday to come around, and that is what we are getting at the moment. So got talking about maybe little small trades in the other way, but ultimately I think the direction is still clear. I think the path of least resistance is still lower in stocks. That's what we are seeing in this morning session. As you can see, European and North American equities lower across the board, dragging the US dollar higher with it, all driven by yields popping higher as well. Your Aussie and your Kiwi up off the back of the Australian data. If we jump over here, we can see the inflation prints out of Australia. Now, the headline figure, the year over year, has pulled back from 6% to 5.4, albeit 0.1% above consensus, right? But that is judging inflation of a year ago, right? And still 5.4% higher than a year ago, albeit less higher than what it was in Q2, if that makes sense. But the quarter over quarter figure for Q3 is inflation has grown 1.2% over Q3 in Australia, above consensus and above the previous. The monthly CPI indicator, which is something that Australia do, is their inflation prints are quarterly. Previous 5.2, consensus 5.4, actual 5.6. Again, strong inflation across the board, which goes back to have a look at these comments yesterday from RBA's Bullock, which did suggest higher inflation is going to lead to another interest rate hike, or continued prolonged high inflation is going to lead to another interest rate hike, which you'd have to imagine these have access to the data before it happens, which is probably why those comments were made in yesterday's trade. In terms of other economic data, we haven't had much out overnight with these API oil inventories, draw of 2.6, nearly 2.7 million barrels, but The main figure, EIA figure, will be at 3:30 today, which we will keep a keen eye on as and when we get to it at 3:30 today. Some business climate figures out of Germany, which is a good indication of business climate going forward, so we will keep an eye on that at 9 o'clock. Expected to be negative, below 100 is not good. In fact, it's 85, even if it beats consensus by a little bit, is not good. But certainly, if it misses consensus, you'd have to expect that euro dollar move to extend itself to the downside, which is likely to drive another bout of US dollar strength, which again may potentially drive some stock index downside as well. So, the BOC, Bank of Canada, are out today with their interest rate decision, and obviously you see the accompanying statement with it. Inflation not exactly strong, minus 0.1% over the last month in Canada, gone from I think 0.4, 0.6, then to 0.4, then minus 0.1, which is what I mean, which is what the bank want to see, but doesn't really call for further rate increases, does it? It probably will stick to this script to say that, something along the lines of they're not hiking interest rates, but if inflation rallies again, they will look at hiking interest rates. Central bank's pretty much like a broken record, but no interest rate hike today. You have to imagine, unless you get a spike higher in inflation, that the Bank of Canada are done. Apart from that, you do have a speech out of Jerome Powell, speech out of Christine Lagarde later on. Is that likely to impact markets too much? Certainly 25 to 10 UK time. US markets are closed. I'm not sure that really is something we need to think about today. Worry about it tomorrow if he says anything of note. We will update on that in the morning. But what we need to keep an eye on, Bank of Canada, if you're a trader of the Canadian dollar or Canadian bonds, does it impact markets? I can't imagine it really does too much, to be honest, but is still a central bank interest rate decision, and we do need to look at it. Business climate figures out of Germany at 9 o'clock. But you can see the US dollar taking a turn to the upside. Your Aussie, after spiking higher on inflation, has pushed lower. Probably a US dollar move, but your Aussie Kiwi spiked higher off that Aussie inflation, has pulled back since. Euro dollar, bit of a pop overnight, or a bit of a pullback, should I say, overnight, but sold off yesterday, a bit of a pop higher overnight, and then is looking like it wants to go again today. Cable doing the same thing. Dollar Swiss looking at an attempt higher. Dollar CAD making an attempt higher. Dollar yen doesn't really want to go up higher into that 150, so that's probably one to stay away from for now. And the dollar index popping up through those short-term highs as well. You can see yields, 10-year yield grinding higher in today's session. That will be the driving factor. Does that continue higher? And does that cause markets to move off the back of it? Gold not doing too much. Oil continued to sell off yesterday. Isn't really doing too much in today's session by any stretch of the imagination. But stock index is what we were keeping an eye on Monday, have taken a bit of a turn, have failed to break through these highs on 3 occasions on the S&P, failed to break through these highs, has pushed lower in the Asian session, has again moved lower, albeit not that much, but has moved lower post European Open. And you can see stock indexes across the board in the short-term time frames in this morning session. The S&P, the Dow Jones, the Nasdaq, the Russell, all pushing lower. The DAX, the Euro Stocks, the FTSE, all pushing lower. With positive earnings across the US historically, you would think that would drive stock upside as it's good business performance, but good business performance, good growth, potentially high inflation is a recipe where the Fed need to keep the foot on the gas in order to cool down inflation. It's not a situation where stocks are likely to enjoy themselves. So, yeah, that's why the standard economics view or standard economics way of viewing things needs to be kind of tweaked. Sometimes you need to take the current context into consideration, which is obviously what we are doing. Monday, this is what we've been hoping for. Does this accelerate to the downside and go down and test these lows? That's what we're hoping for. That's what we've been hoping for all week. Let's wait and see. Does it end up playing out over the course of today, or do we need to hope for some high growth figures tomorrow?